Getting the recording started. Good afternoon, traders. What a day. Let's see how we did here. 21% very green, 48% green, 15% flat. We had 14% red, 2% very red. Not bad. Not bad considering. Very, very good. All right, let's get our notes out and talk about the market. What a wild session. I was doing my thing, talking about footprint charts, watching the S&Ps off my right monitor, trying not to drool all over the keyboard. I was like, I know I will go through about one keyboard a week, but I mean, this is too much. Too much, too soon. What a crazy move. My goodness. All right. Just bringing up my notes here. All right, fantastic. Here we go. All right. Good afternoon, traders. It is December 14th, 2023. S&P futures up 8 1/4. NASDAQ futures down 36 3/4, 16,741. The TLT up 220. The 10-year down 0.113. The 2-year down 0.108. The dollar continues to step on a never-ending rake. Major candle over candle level. So Marubozu there. Back into this prior pivot low, 101.81, almost there. I expect more potential downside as this rally gathers steam. Bitcoin up 121, 43,009. Natural gas up 0.079. Gold up 53. Very nice. Look, 2050. Look how we retook that 2000 handle off the Powell moment there. So we just changed our angle of ascent there slightly. Crude. Beautiful bounce off that 69 1/4 support level. And we are potentially on the way to retest 73.50. Beautiful moves today. Not surprisingly at all, the KRE up for almost 5%. The TAN up 8.14%. As we said yesterday, we're expecting a reversal in the TAN post dot plot and Powell capitulation. Home builders not to be outdone. Look at this breakaway gap after yesterday's action. Again, I don't really trade the XHB, but what an amazing move. XLB also very nice move in the materials. Down on the day, XLK. Is this down on the day? Yeah. And the XLP. Consumer staples. XLU also lower. I do expect us to continue higher. XLE, beautiful continuation back through the daily 200. I expect around 85.90 next. Look at this hourly chart here, fantastic. The IWM, for its part, major gap. We're back now through the July highs, so we're at the top of the range here in the IWM. Just a wild move. We're consolidating, holding the gap. Extremely bullish. It looks like 212 is next. The IWM. Look at the monthly here. Look at this. Look at this base reversal. Just fantastic. So really good stuff there in the IWM. The Dow, did we make all-time highs in the diamonds today? Did we? It looks like it, right? I think we did. All-time closing high. Spiders, of course. The party continues. You know, your upper end of the channel is like 493, guys. This move has some legs left. All-time highs 479. We're very close. Let me ask you guys a question. Type 11 if you think we make all-time highs by next week. What are you guys saying? Yeah. Crazy. My mic says no. We'll see. We shall see. Very interesting. Okay. Um, all right. Excellent. So, uh, basically, the market not only managed to hold a pivot after the Fed pivot, after Jerome Powell threw in the towel, capitulated um, to the peanut gallery. And as we saw here, we continue to see not a fully broad-based rally. We had some pullback specifically in the XLU today, and a little bit of weakness on the XLP, but very, very strong market action, especially in the small and mid caps and the fintechs and regional banks and solars and home builders. But yeah, no, just amazing action. The messaging from the BOE and ECB today was not quite as dovish as we saw from earlier comments, but the narrative and sentiment in the market continues extremely strong. At this rate, based on the chart, it looks like we're set to make all-time highs at the top of the channel here in the SPX, the S&Ps, etc. European markets came well off the highs after the ECB indicated they would not be tapering their PEPP reinvestments in the middle of 2024. Lagarde also noted they have yet to discuss rate cuts, pulling a little bit of wait and see there, and definitely tempering sentiment. The 2-year yield held to 4.36, and it's now down on the year, while the 10-year is, I believe, still back below 4. Yeah, it is. Despite a stronger than expected read on U.S. retail sales today, which I thought was surprising. Gold and copper and most other commodities continued to surge, while the dollar remained under very serious pressure. Small caps are leading the way, and boy, are they leading. And we got some, again, just wicked rotations, right? The NASDAQ generals taking a breather, getting rebalanced, maybe some outflows, while the dash for trash, the dash for dash for regional banks, industrials, home builders, solar, etc. continue. So we had initial jobless claims this morning, 202,000 versus 220,000. Continuing claims, 1.867 million versus the 1.879 million. The November import price index came in negative 0.4 versus a negative 0.8. November advanced retail sales came in at 0.3 versus a negative 0.1 expected. X auto month over month 0.2 versus negative 0.1%. Business inventories came in line. All right, so that's the Atlanta Fed GDP now raises their Q4 GDP from 1.2 to 2.6. So it's getting hot in here, as the song goes. In other headlines, money market funds see first week of outflows since October, according to the ICI. We talked about the GDP growth estimate. From Goldman, following this morning's import price data, we left our November corn headline PC inflation estimates unchanged at 0.07%. Intel says Gaudi accelerator outperforms NVIDIA H100. Intel didn't have a bad day today, especially off the open, but you can see they sold it right off. I really wasn't paying that much attention today, but we did say early in the session that they were gonna sell the bejesus out of this presentation, and they did exactly that. So for those of you who faded the move, well done. Momentum Express style there, nice move, very nice move. So we talked about the European central banks. From Redfin reports, mortgage rates and housing payments dropped to lowest level since spring. Daily average mortgage rates have fallen to 6.82%. Housing payments have dropped to the lowest level since April. That, according to a new report from Redfin. This marks the first time daily rates have dipped below 7% since July. On the Israel front, White House Sullivan spoke with Israeli officials about possibly transitioning from high to low intensity operations in the near future. In unusual call activity, we have activity in everything. Unusual calls, to be a little bit more precise, letter C, as in Charlie, the December 22nd, $52 calls. PDD, the February 155 calls. And Snow, the December 205 calls. Those were particularly spicy today. In unusual puts, Bank of America, the September 32 puts, and Pfizer, the February 25 puts. That is the long and short of it, ladies and gentlemen. This morning, we were in a few interesting things. I had a good watch list this morning, and unfortunately missed a few entries that were just extremely annoying, primarily Carvana. So that was annoying. So we were watching CVNA for the opening range breakout, well, basically continuation of yesterday's move, and I missed my 2-minute entry. I missed my 5-minute entry. We did, however, catch Tesla early for a move off of like 242.90, 243, something like that, to all the way to 248. So that was really nice. Caught about $5.5 there on Tesla. Roku, we bought it very early off the drive, and at 108.50. So that's fantastic. Really happy with that one. That was a great trade, and we caught we sold the top almost perfectly there on Roku. Bought Unity off the open as well. Holding it overnight for the move to 39.50. This one's doing great, trending higher, as you can see. Here's your angle of ascent. So it held my stop, held the channel, and away we go. So Carvana, that was really annoying. I took a little AMD, sold 3/4 on the pop there into the 140, 160s, and then trailed out of the rest. Same thing with PayPal. I thought we were going to have a little bit more follow through. Sold PayPal into the R2 pivot, 3/4 exit right there. It was more of a scalp. It's very, very overdone, so I was being cautious, and then trailed out under VWAP on the rest. Break even. So that was really good. We closed out our LYFT trade, Lyft. So Lyft, we had taken Lyft. It had gone through the weekly here, and we took it right at the weekly break, 13.27. Sold it 15.25 for what was like a 15-16% move in a few days. So that was terrific. We bought Lyft right here, and away she went. So beautiful little swing trade there, 4 or 5 day hold. That was great. What else? We trimmed some NET from our swing near the highs there off the open around 84.70. But I'm still expecting 86 and 89 on this one. You can see some of the other cybersecurity names did not hold up as well. Palo Alto had a bit of a retreat, a little bit of a turnaround bar. It's still within a bullish context, still within the channel, but this is not necessarily the kind of bar we want to see. CrowdStrike also, high wave candle near the top, so we're seeing some signs of short-term exhaustion as the market starts to focus on other sectors. And Zscaler also splitting top near the highs. So we'll see on NET. I might have to take it off tomorrow if we have a lower open. Yeah, so that's that. From overnight, I had taken Apple long off the open yesterday, right here, and sold it right into the open for a nice like $2.50 gain. Amazon, no, I sold it in the pre-market right before the open. Same thing with Amazon, right? We bought Amazon off the open yesterday and sold it in the pre-market, about $1.60 gain on that one. I didn't like the way it was holding in the pre-market. I didn't like the relative weakness to some of these other names that were really strong in the pre-market. So I thought there was a good chance it might underperform today. So I took my gains there early out of prudence, and that turned out to be the correct thing to do. So that's I think that's it. Did we trade anything else today? I didn't take the snow. Didn't take the CRM. I feel like we traded other things. Oh, PDD. No, we still have PDD on. Yeah. Yeah, so that is, I guess that's it as far as trades. Let me make sure. Didn't do anything else. IoT, AGI, Schwab. Oh, we took off Schwab. Disney still on. Oracle still on. Workday still on. Yeah. All right. So that's the update on the day. Very pleased with the session overall. We'll see if the market can continue into tomorrow. I think it's going to be a potentially difficult day tomorrow with the quad witch, and we are, in a very aggressive angle of ascent. And you can see here on the lower high, this is a typical liquidation type of failed auction reversal here. You had a strong two-wave corrective channel break into 47.66. I completely missed this move. We were in Professor Geronimo mode, so unfortunately I totally missed this move. Look at that move, fantastic. Yeah. All right, so excellent day overall. What I'll be looking for tomorrow is whether we can re-enter the back through 47.70 into this reaccumulation value right here. So I don't know if you guys remember, I kind of jokingly, when I went to lunch, I said as a joke, right? UTAD much? That was on this UTAD, and you saw their two-wave corrective lower high. Was my mic on when I said that? Maybe I was muted. But basically, just a little basic Wyckoff analysis, right? Distribution top, up thrust after distribution, two-wave corrective lower high, sign of weakness, retest, and climactic sell-off. So very common distribution pattern in the markets. Okay, good. So the challenge now is going to be taking the auction back through 47.76 ish, and because you may have this potential intraday trend form tomorrow, right? Basically into the top of the channel. You know what I mean? One second, guys. All right, there we go. Sorry about that. Okay, so that's what things look like in the S&P. Triple Qs, very similar, right? We now have a new declining tops line and a secondary resistance pivot to contend with around 4,350. And notice the IWM, very different, right? Look at this relative strength in the small caps. I guess note the difference there. The Dow, same thing. You see that? So there's your sign of relative strength, of rotation. So it'll be useful information in terms of what to focus on tomorrow, for sure. All right. Let's see if we have any emails from our esteemed subscribers. Let's see what you guys have to say. All right. We have a couple of emails here. Let's see. See who we have. Oh, we got Andrew. Turn down for what? Turn down for what? All right. Andrew asks, regarding the Magnificent Seven, what's the difference between phase proportionality and symmetry? Okay. Well, symmetry can refer to multiple things. Symmetry can be can relate to patterns. It can relate to pullbacks. You know, you can have angular symmetry. You could have time symmetry. You could have length symmetry, right? Proportionality typically refers to angular symmetry and time symmetry. And these are all topics we have discussed very heavily in our Momentum Mastery, now available on Amazon. Also, I added review day to my plan and 50 burpees because I can't let Bobby outdo me. I don't know who Bobby is, but knock yourself out. It's good non-barbecuing advice. All right. Can you give me a quick example on how you would replay a trade you should have not taken? I usually will look at it and say, yeah, I shouldn't have taken that, but that doesn't seem to be sufficient. Yeah, okay, so when I was a kickboxer, I was amateur and then semi-professional, I would watch tapes of my fights and pause the button right about as I would be getting knocked out to figure out what stupid thing I did or failed to do that caused significant brain damage and loss of neural muscle tissue for the rest of my life. For example, well, the most important thing, Andrew, okay, is, so let's take a look. All right, so there's an emotional, we've talked about this before, okay? So let me go to a single chart. Why are these all quads? What's happening? Okay, so we've talked a lot about the 4 stages of trader development, right? For the benefit of our new members, we're just going to go over these real quick. What are they? Anybody? I'm not going to type all this. Unconscious incompetence, conscious incompetence, conscious competence, inconscious or unconscious competence, right? When you first start trading, you're usually most people are usually attracted to trading during times of great excess. You hear podcasts, you see newspaper articles, you turn around, all of a sudden everybody's trading crypto. There's money being lowered on crates by helicopters. Everybody seems to be making money. So you open yourself a TD Ameritrade account and you start buying stuff. Everything's going up. And all of a sudden you're making money, right? And you're a victim of an acute case of Dunning-Kruger syndrome, right, where you think you know what you're doing. This happens to everybody. Every market cycle, it's like the tides, right? These are market cycles, right? Every market cycle attracts traders here, 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 right? Most traders enter here, right? Some traders enter here, and they're in most of them are in stage one of their learning development. Very few traders manage to maintain the gains they made between stages 2 and 3, and most give everything back in stage 4. And by the time stage 4 is over, not only have they lost all the money they made, they're now negative. Does that ring a bell? Does that seem like an experience any new traders might be able to relate to? Yeah. So that's what markets do, right? So when you start, you don't know that you don't know anything. You're just making money. Maybe you're trading some strategy out of YouTube, or you joined a room and they're telling you to buy the green bar when the crosses the red bar, and the flux capacitor reads buy me, and you do 5 jumping jacks and you wiggle your nose and you're making money, and it's great. And then very quickly, when the market ebbs and climaxes and it enters a difficult period, you quickly realize that you're wildly under-equipped, right? So you're wildly under-equipped to actually be able to compete in a market that's competitive, right? When everything's going up, it's much easier for someone who doesn't necessarily have skills up to par to make money. So you struggle in this phase for a very long time. Okay, trying to figure out, to learn everything, right? And there's a lot you need to learn. There's a lot you need to incorporate into your arsenal as a trader to be competitive in the market, right? You need to learn technicals. You need to learn money management. You need to learn risk management, right? You need to learn strategy. You need to become emotionally intelligent. And most important of all, you need to become experienced. There is no shortcut for experience. Trust me, I have looked everywhere. There's no app for that, okay? You're going to have to eat a lot of crap through this and this and this, and sometime between year 2 to 3 or 4, right, you're finally going to achieve conscious competence, right? You're finally going to, through great effort, right? It's going to take a tremendous amount of effort. The market's open. You're watching whatever, 18 tickers. Your heart's pounding out of your chest. You're watching technicals. You're trying to assess what's in play for the day. What's most likely to work. You're trying to think risk, reward, probability. You're going through the technicals, right? And you have to manage, you have to keep your emotions in check, right? Your life turns into a Richard Kipling poem, you know? And, you're trying to apply whatever strategy you have to wherever you are in the price cycle. You're trying to keep your shit together, and you're balancing all these different variables that you need to keep in harmony in order to maintain a consciously competent posture, right? And what happens to a lot of traders during this period is they make a lot of mistakes. They trade the wrong time, they trade the wrong ticker, they size too high, they size too low, and oftentimes the biggest failure they experience is their emotional intelligence, right? They're unable to say, uh, perform any, 1 through 4, right? Technicals, money management, risk management, strategy. They're unable to view the market objectively because maybe they've taken 1 or 2 losses. They didn't size properly. Their max risk on the day is $200. They're down 7,000. So they start doing really, really stupid things, right? And so you suffer tremendously, and it turns into a sort of a vicious cycle that starts eating you alive mentally, emotionally, and definitely your capital, right? Sound familiar? This is a cycle that every single trader goes through. Not judging, I have been there, and it's a real fight. Once you get through conscious competence, you start to slowly waver between these two phases for a while. A couple of years, you go through periods where it's really hard and you really have to focus, and then you get to a place where it's just a routine. Like you don't have to think about all these things, right? You're it's like a jazz musician, right? You hear you hear a riff in E minor seventh, G major seventh, uh, E minor seventh, and you don't have to go, okay, that's an F sharp G, C D. No, you're like, okay, ba da ba 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 da ba da. You know what I'm saying? You're just riffing with the market because you've spent years internalizing all this information, right? It becomes intuitive. Can you stop jacking? David W. You know when Kelly isn't around, bro. Exactly. Yeah, no, it's good. I love you, dude. Yes, so you begin to develop, and this is a dirty word. This is a very dirty word in trading, okay? You develop trader instincts. It's not built into your DNA because you're a human mammal, okay? But it's built into your trader DNA. Yes, there is such a thing as a trader DNA, okay? And it's not instinct or intuition in the way that, we have a sixth sense about whatever ghosts in the room or, you know, your mama made empanadas that morning. No, what it is is basically the constructive, repetitive, and very much methodical approach from years of disciplined effort, right? The muscle memory you've built as a trader to the point where, based on everything you're seeing in the market, you have that, okay, I have seen this movie before. Just like when you go to a very experienced mechanic, they can diagnose your car by just sometimes just sniffing under the hood, right? Ever see one of those guys? I'm like master mechanics. They can hear the engine, they can smell the engine, and they can just uh, exactly driving with the market, Rose. Okay, so to answer your question, Andrew, uh, the more you play back your mistakes, okay, the more of this information you can incorporate into your central database, right? Your instinct is nothing but a heuristic model. You guys know what a heuristic model is? Okay, we're not going to get into all that, right? It's almost like a Bayesian database of past mistakes. So the more you replay your activity in the market, okay, the more you're going to see what you didn't see before. And the more you increase your capability to see it in the future. Let the force flow. Yeah, something like that. Okay? So, I mean, bro, you can play the Rocky theme and you can do your burpees and push-ups and I don't know. I don't know whatever else you're into, I don't think that self-castigation through calisthenics is the way to a successful trading career. If you want to do it, that's fine. But I think this is more important. Okay, so that's why I think market replay. I think that's why market replay is important, right? You'll find I've had my sons do this, okay, and I've had other people do this, and you know what happens to a lot of people? They see the same bars, knowing what's going to happen, and many times when they see that giant exploding bar, sometimes they will feel the urge to take the trade anyways. Can you believe that? Right? Because you are driven by your lizard brain in such a powerful fashion when you see that giant green clearing bar in the morning that you know is going to turn into this in about 3 minutes, right? But you're telling yourself, okay, this time, I know there's a 15-minute 200 and a floor trader pivot, and Bill Gates just said he's shorting Tesla, but maybe I can just squeeze a quick 20 cents out of this, okay? Uh, the the greed urge when you see violence in the market is very powerful, okay? So you need to hone your emotional intelligence along with your ability to incorporate information quickly and keep a very level analytical head so that you are not the bass chasing that lure, right? That mondo worm. Any bass fishing people know what I'm talking about, right? You need to keep your wits about you. And a great way to do that is to replay the market, right? Obviously, very important while you're in this stage of your trader development to tear the F down. I cannot say this enough, guys. You need to be worthy of the capital you are trading, okay? If you're, I have a spreadsheet that I made for you guys as an example earlier. If you're trading a $30,000 account, you live in $70, $80 a day land, okay? That's what you're making or losing in a day, okay? Yeah, I know you are. You're doing fine, dude. This is, I think, for the benefit of a lot of other people who are struggling. All right? You've got a $50,000 account. You're living in $150 a day land, $200 max. Obviously, okay, if you're a more experienced trader who's really paid his dues and you're trading a prop account, you're going to be able to manage the pressure, the risk and responsibility of that leverage and that capital at your disposal with a lot more grace, finesse, and success, right? So this is all definitely dependent on your level of experience. But this phase that you're going through, right, somewhere between 2 and 3, Andrew, it's a very delicate phase because you could go into some really negative feedback loops, right? You start to ask yourself all the wrong questions. Well, why can't I succeed in the market? Why do I make the same mistakes? Why do I suck so badly at trading? Why am I never going to make it in this business? Your brain will give you all the answers you want. They may not be the right answers, but it'll come up with some good ones. Some usually pretty self-destructive ones. So asking yourself the right questions and doing the right things to remedy those mistakes is very, very important. All right. So that's the end of that rant. Okay, we have another trader here. Who wrote? He's all right. I'm that guy you talked about. How can I change so I learn to earn? All right. So he wrote. All right. First of all, in all seriousness, you are the man. I did pay him $50 to say that. That's my compliance disclosure. Mere mortals like myself are struck by your consistent money-making skills. That cost me $150. On the other hand, I barely break even with most of my trading. I do pretty much all the useless actions you say you did as a novice. Yeah, everybody does. Taking 50-cent gains by closing positions too soon on winners and many, many quick losses that erase the minimal gains that I do make. My main problem seems to be a lack of conviction and desperation to avoid losses. I overtrade. I get lost in analysis paralysis and can't seem to make a decision quickly enough to get the trade in at the right price and time. What can I do to improve my batting average, become more consistent, and then regain my broken confidence? Yeah, that was a very expensive email. I got to stop bribing these people, Eddie. You know, I got to earn some of these compliments, bro. All right. Wow. Good help is expensive. Well, first of all, I feel for you. Um, so the only way to gain confidence in the market is through victory, through winning. Uh, you'll never be confident if you suck at trading. You'll never be confident if you don't if you're unable to make consistent profits. Now, what I'm saying, obviously, is self-evident to most people, but it's worth noting that it's a bit of a vicious cycle, right? So you're not confident, so you lose, right? And because you lose, you're not confident, right? And you have to somehow somehow have to break orbit, right? Reach critical velocity so that in one of these turns you finally go into profitability, right? And you stay there. And that is one of the biggest challenges most traders struggle with, right? How do I break this cycle? Because this cycle isn't just like this, right? It slopes down, right? You have a certain degree of confidence here, then lower confidence and lower confidence, and the lower your confidence, the lower your results, right? Until you eventually just wash out of the market. Your P&L is going like this. Your emotional gas tank is going like this, right? Your desire to trade is going like this. And usually, as all of this is happening, your desire to make money for past losses is going parabolic, right? And the more parabolic your desperation goes, what do you think is happening to these things that you critically need, right? It's not a good combination. So uh, this is a tough spot you're in. Okay. Ultimately, here I'm just going to give you a few broad strokes. I don't know how long you've been in the market. I don't know if this is purely a confidence thing or if there are some gaps in your technical analysis, your money management, your risk management that you need to fix, right? I've worked with traders who, by simply tweaking their money management a little bit, have turned their P&L around, right? By simply executing some money management discipline and some risk management, they're no longer taking huge losses, right? So it may be something like that. What a lot of traders suffer from, right, is they, this used to happen to me. I didn't feel like I was worthy of the account I was trading, right? So I felt like I had a lot of capital at my disposal, and I didn't really feel like I was confident enough to make the trades I needed, and my when I started working with my mentor, I he pulled me aside and said, well, what's your issue? This P&L report is terrible. And I said, oh, I just got to work on my confidence. He goes, bullshit. You're a terrible trader. You need to learn how to freaking trade. You are terrible at this, right? And that was a huge wake. that was a wake up call, to say the least, because I hadn't done enough self examination to actually figure out what the problems in my trading were. if you're terrible, say for example, you're you're terrible at, I don't know, boxing, right? And in the market, you go up against a murderer's row of traders every day. The world's best is what comprises the top tier of the market, right? Imagine I told you, listen, I got a quick warm up fight. All you got to do is knock out 1972 era Ken Norton, all right? Or you know what? Maybe we'll give you 1967 Sonny Liston. It'll be a breeze. Don't worry about it. Yeah, you know what? Even better, 1987 Mike Tyson. You just go in there, do some footwork. I have a strategy for you. You have a strategy, coach? Yeah, I have a strategy. Just, when the red line crosses the blue line and the little perpendicular thingy-majig indicator goes like this, that's when you punch him in the nose and you'll flatten him out, okay? What do you think is going to happen to your self-confidence when you wake up in the hospital 3 days later after you tried to do the thingy-majiggy with the blue line and the red line didn't work and you got laid out by Mike Tyson? That's bout number one, okay? So that was a loss. What do you think is going to happen when you go into bout number two? Are you going to be very confident or not so confident? You're going to have brain damage. Yeah. So there's a question of basic competence, and unfortunately, 2020 did a number on a lot of people who thought they were really great traders. They were printing 6-7 figures a year, and they were doing great. And then they had a rude awakening in 2022 when they found out that they couldn't adapt to the new market because their overall trading skills were not really up to par with the elite of the market, and that's who you're going up against every day. So the first question you have to ask yourself is, are my skills as a trader, am I as a trader up to speed? Like, that's the first thing. Like, in terms of your general competence, is it up to par to compete in the market? Okay. Only you can answer that. I have never seen your P&L statements. I haven't seen your trade, so I'm not sure where you're at. If it is, okay, then you have either a strategy issue, and that encompasses, everything from setups to money management to risk management, etc. Okay, and if either one or two are not squared away, are you going to have analysis paralysis? Are you going to have desperation? Are you going to have a tremendous amount of anxiety and insecurity? Like, of course you are, right? Let me ask you a question. If you tiered down to a reasonable level, right, and had losses and wins that were within the expectation of a novice trader, somebody who was putting themselves back together as a trader, do you think you would trade with a little less anxiety? When I started trading professionally on my own, I had a massive drawdown. My mentor had to put me back together one piece at a time. I was on a $5 max risk for a long time after having made millions of dollars. I was a complete mess. So, I think a lot of people resist the small account type of, small risk type of trading because they feel like they're going nowhere. But if that's your issue, you need to tier way down. Okay? Way down. So, you can email me more details about what's afflicting you. I suspect that's probably I see here you get lost, analysis by paralysis, and can't make a decision quickly enough. This to me speaks of uh, maybe lack of experience, right? Um, like when I take a trade, I know immediately when it's no longer going to be working. And when it's no longer going to be working, I know exactly one of three scenarios that I'm going to apply instantly. I don't have to think about it, right? Because I've already thought about it. But even if I hadn't thought about it, in most cases, I'm pretty sure I know what to do. If you're not there yet in terms of your general competence, you have a lot of work to do, and as does everyone. And you need to build those skills. You need to focus on doing that. All right. So I hope that helps. Email me more details if you want me to go in deeper with you. All right. You know who you are. Any other comments or questions, guys? Let's see. Rose said, sizing down, you can hold through chop versus selling to. Yes, exactly, Rose. 100%. Richard said, so when you were talking about footprint charts and delta, I didn't get the example when you put numbers descending 36. I don't know what you're talking about, Richard. I'm not sure what you mean, man. Can you be a little bit more specific, man? I don't remember. Could you analyze CVNA intraday 2 and 5 minute? I was there on a spot to go long. Good risk reward after it made the initial high at 9:45. Yeah. So when it made that high, I was already too late. On it's Carvana, right? Yeah. So Carvana, you gotta start with the 15 minute on the hourly on this one. Okay. I know Gator's been really drooling over this one as well. A couple of weeks. So we've been watching this consolidation here, right? So this is let's go to the hourly. So we've been watching this this thing accumulate through the lows, right? This is the 1 hour chart. You had your climactic selling here, high volume, okay? And then your initial impulse move, retest, two-wave corrective higher, compression, higher move, retest. This is how Carvana moves, right? And then you had your major breakaway gap up through the upper pivots. So here is, your rounding bottom, your reaccumulation. You see that? And today, what we were excited about with Carvana was that we were finally over the upper bands, okay? And if this is move 1, this is move 2. We were excited for leg 3 into that 52.78. See this big red line? That was what we were looking for. So let's go to the 15-minute. So this is yesterday. So this is today. So this is the closing pivot yesterday. Okay, so I'm going to redraw this for a second. So this is yesterday's this is last few days. So you're building a cause here, compressing. You put in leg 1 here. Okay, you see that? This first initial impulse move. So today I was excited because we finally see continuation off the initial impulse move, and this is the measured move higher right here, off the open, right there, right? So leg 1, leg 2. You didn't really get because it was such a powerful breakout. The only entry on the 2-minute was the opening range breakout, right there, 46.47. Okay. Your secondary entry would have been the falling wedge, right there, which I would have taken on the 5-minute at that point. Okay, so it would have been like 50.25, 50.15, and I would have had target 1 and target 2, knowing that the potential on the trade for the trade on the day was greatly diminished. So those would have been my entries, but I missed the initial 2-minute opening range breakout, which is why I ended up not taking it. Right, I missed this part. So it is super laggy. How much weight do you put into seasonality? I pay attention to it, VR. In the past couple of years, it's been pretty wild how often it has not been necessarily followed, the almanac. Yeah, for ATES you need a data feed. So I use DX feed. You can use IQ feed, DX feed. There's a bunch. Yeah. So that's CVNA analysis. Lily, any thoughts on this one? Looks like near bottom of the channel. Yeah. So on Lily, so you had healthcare down today. It was you had some relative weakness in healthcare today into the close, and Lily, if you look at the 15-minute, you can see here that so you had your initial shakeout, your two-wave corrective back to the top of the channel. You see that right there, 1 and 2, and then we've talked a lot about channel development and how many times you'll break the channel originally, but your short entry isn't until you fail to re-enter the channel and then you drop. So now, once this, so this is your incomplete auction, right? Your failed auction. If this gets taken out, you have a screaming short here at 567.5, right? Because you're completing the auction. See how this price pivot held here, right? There are bulls who have been playing this this compression. They tried here, they failed. The bulls back from 568.25, tried again, two-wave corrective, failed to hold the channel, failed this prior high. So if they can't hold and build a reaccumulative consolidation here, right, and try again, if this fails here, you're going to go back to 540 real quick. 546 and then 540. You see what I'm saying? Oh, it's not an it's a joke. I say Amber's on because Amber is our fearless leader. She's our counselor. She's my captain. So I just say Amber's on as a joke. Contact Amber at info@t3live.com, and she will hook you right up. Elizabeth, thank you. But yeah, we do a lot of price action templates, Chandu, and this is a really, really basic one in terms of channel development. All right. My pleasure, Pitbull. My pleasure. Any other technical analysis questions, psychology questions, barbecuing questions? Andrew, what is it with you and burpees, bro? It's like, it's not Bally's Total Fitness in here. Would you mind going over the daily chart from September to October bottom and talk about technical analysis and the market? How were you approaching the market at that time? I struggled during that time because I got attached to my long thesis from September to October. Sure. So September to October, we were obeying the trend. We were shorting the top of the channel and playing the ranges. So this is September to October. Let me just delete all the drawings. So every trader in this room between July and October got really good at selling the declining tops line. Okay. Got really good at avoiding being overly bullish on the lower declining line, as it often fails, right? Case in point here, right? So when we're in a very significant bear channel, we approach the market very differently. So in September, this is September, right? This is what we were looking at. We had a high, a lower low, and then a higher low, lower high, excuse me. I always get those confused. So high, lower, low. Okay. So let me ask our traders a question here. Is this a bullish or bearish schematic? Basic price schematics of the market. Yeah. All of our traders were salivating, waiting to shop to sell you a rug for $48,000. You could have bought at Walmart for $100, right? Everyone in this room who's a technical trader was waiting for this bearish schematic to come into your overhead supply line so that they could short the market back here. And we were shorting the market. Make sense? So that's how we approached September to October. In October, we kind of went hog wild, balls to the wall, and started buying the market because we were back into a major demand zone here and here. And so we bought the market. Like the last week of October into November, and we caught some crazy moves up here. That was very nice. Yeah, well, you did sell me it back. You were long. Well, so here's the thing, right? So here's the thing. So a lot of traders would have failed to recognize that this, in fact, was not a buy setup, but a potential ledging formation. So the schematics we work on in this room are very much driven on, like basic Al Brooks price action, a lot of John Murphy, right? A lot of Edwards and McGee, very traditional technical analysis. And the thing is that, when we have so like there were a lot of things going on here, right? This high was lower than this high and this high, okay? And you lost leg symmetry here. You were deeply oversold, and into this two-wave corrective, when you made a lower high here, okay, we were thinking head and shoulders. We weren't thinking necessarily buyable buy setup. Now, it could have gone like this, right? You never know. But given all the other information at hand, it's way too aggressive. You don't have enough evidence that that's the case, right? Do you see what I mean? You just don't have enough evidence. So it was a lot of people got hurt here, not just you. Trust me. So that's a good question, for sure. September was tough. I remember a lot of people had trouble in September. It was definitely a month where we were fading a lot of rallies. Do you ever look at seasonality for a particular stock when going long? Yeah, like for ramp up into certain events as a seasonal play for sure. Retail stocks into October, November, and December is always a no-brainer. Insurance stocks and generator stocks into hurricane season, those things seem to work really well. You know what I'm saying? The last week of July trade, yeah, those typically work well. Yeah. Harry, when you have compression, then upthrust, then reversal, how would you? Yeah. So the way I money manage that trade. So oftentimes, what Harry's talking about is, say you're at the, usually these things happen when typically you're late stage in a trend. So, and some of the telltale signs, Harry, are you've lost leg symmetry, you have oscillator divergences. So, like, say for example, you have a super symmetrical trend, right? And then um, all of a sudden you have a change of angular ascent, and you start going up much more aggressively, and you're flagging, right? And your volume has been going steadily higher, and all of a sudden you have price volume divergence, right? And your RSI is divergent with price, right? So you have all the indicators that this bull wedge may in fact be a bull trap, right? So typically, say for example, on this type of setup specifically, if I have where did I do that? Hold on. Can I revert? Oh, thank goodness. Okay, so if I have buy to open, I don't know, 750 to start my position, I'll have sell to close 1500. So that'll stop me out and enter me short on the reversal, which is usually extremely violent and will stop me out and get me short. Does that make sense? But that's something I'll do on this setup, Harry. It doesn't always mean that every stop is a reversal. Make sense? So I hope that answers your question. Oh, yours is a different question. When would you avoid not to short up thrust reversals, and when would you consider your up thrust reversal has failed? Oh, up thrust reversal. So, okay, that's also a good question. So, being more like a classically trained, so I'll look for, and everyone who took the master course will recognize the distribution top. Okay, so basically the up thrust reversal. Okay, so typically you have here, like 1, 2, and then you'll have your buying climax, right? Your retest, your rally, retest, rally, retest, rally, and then bulls fail here. Okay. And then you'll have a major sign of weakness, a shallow retest on a weak schematic, and this weak schematic could be a Who Killed Kenny, right? A flat base. It could be a rising wedge. It could be a ledging formation. But basically, I usually don't trade the UTAD. I'll wait and either trade the break of the ledge or the retracement on the secondary sign of weakness for the measured move lower. Does that make sense? I have to have a very good reason, Harry, to sell the UTAD, because you never know if it's going to be a sign of strength, an LPS, and a whole measured move higher. So this is 1, 2, 3, and a 4. You just don't know. Does that make sense? I hope it does. All right. What are some of the ways you can tell difference between pain trade and continuation after a flag? Sure. So, this is usually an auction, like an auction theory thing. It's pretty wonky, but I'll just keep it simple, right? A pain trade is typically when you're coming in on a prevailing bear trend, okay, and you have market participants who are either reaccumulating a short, or better yet, if this came out of nowhere, okay, if this move comes out of nowhere, you're going to have what, guys? Who's going to be participating in this? Obviously, they're shorts, but what kind of shorts are they? Anybody? Bueller? Not retail. I'm talking about the price cycle. Yeah, late money shorts. Do late money shorts have a lot of room to play with in terms of risk? Now, if it's a beautiful sudden move, right? Are a lot of inexperienced traders going to be drawn to this redistributive ledge or wedge or bear flag? It doesn't matter what it is. Yeah, exactly. Okay. So when the pain trade occurs, okay, that'll be okay. That's going to be an exhaustion reversal. Okay. It's not a failed auction. Exhaustion reversals are typically punctuated by a quick pop and then the price action slowly fades in either direction, right? Uh, you basically fulfilled the needs of the shorts, and now once that happens, right? How many times are you in a short, you get a pain trade, and then it turns right back down and goes lower? Does that seem familiar to anyone? Yeah, all the time. Okay. So when you take pain trades, when I take pain trades, what I always do, or like 99% of the time, unless I have a reason to, is I'll squeeze the shorts out of their trade, but I'm not looking for a two-wave corrective unless I have a reason to, right? So when you have an exhaustion reversal, the move tends to be sudden, voluminous, sharp, and in short duration. And after that, you can trend maybe higher a little bit or you can trend lower a little bit, but it's punctuated by lack of voluminous follow through in the direction of the pain trade. Does that make sense? So in this we're gonna deep dive in Momentum Mastery 2 on this, but basically when you have a failed auction, right? Right? A failed auction will give you what usually? Like you have a channel, okay, then a two-wave corrective, and then a neckline. What will this pattern typically give you instead? You have a failed auction at 3,600. What will typically happen here? Yeah, two-wave corrective reversal, right? Oftentimes the resumption of a trend. You guys remember that in Amazon a few days ago where Amazon came in hard and then just kind of ground higher all day? Was it? Yeah, right here. Right here. There it is. Remember this day? It just looked like a wiener going higher at a 45-degree angle. So you had a prevailing uptrend here, right? Longs came in, failed right at the floor trader pivot. They smacked it back down. Okay, you had a failed auction underneath 145.26, and you see how it just drifted higher. This doesn't mean people are dying to buy Amazon. It just means there's no more sellers, right? So, anyways, well, no, growth chart. I'm just using it as an example. All right. So I hope that helps. I hope that answers your question. Can you give me an example of compression overnight up thrust reversal? Yes, sure. Give me one sec. So yesterday, at what time, Harry? Yesterday at 9:30. So today's Thursday. I'm reliably told. Wednesday at 9:30. Okay. All right. So what's the question? This was just weird. Yeah, so you opened right here. You opened at 9:30. You didn't have an upthrust. At the open, you had a little bit of a shakeout. You came right back. you double topped, and then you kind of you channeled lower in a wedge until the FOMC. And I distinctly remember telling you guys, get ready for the market to drift higher when we were 10 minutes out, and it did just that, and then it exploded. That's not an upthrust, Harry. Nothing is actionable there. What happens 80% of the time when you break a value area, Harry? Not my opinion. This is cold, hard statistics. So this is your value area. Wow, these charts are so painfully slow. You had a quick shakeout. There's your point of control. You see that right there? 4,700 into the even number, and you came right back. That's all that happened. You were literally trying to like jump really hard on a trampoline, thinking you were gonna punch a hole through it, and all that happened was effort equaled result. You see that? Remember, bro, use the slow schematic after the major sign of weakness for leg 2, and you'll be much happier. Make sense? How do you use VIX when deciding whether to go long or short? I don't, Deepak. The VIX does not work for me. Not anymore. Does anyone still use the VIX to trade? If you do, that's great. It doesn't work for me. Yeah. 0-day options have made it weird. I look at the VVIX sometimes, the volatility of the volatility. It sounds like somebody made that up at a Monty Python sketch, but that's an actual thing. Yeah, but that's yeah, like a dream within a dream, a riddle wrapped up in an enigma. Yes, awesome, good times. So let's go over the calendar for tomorrow. If there's no further questions, take a look. All right, we got Empire State Manufacturing Index at 8:30. Industrial production, these numbers will probably be hot. The market probably won't care. And then we got a PMI composite flash. It'll probably be hot. The market probably won't care. That's this is the fact. All right, cool. That is what we got. Are there any other questions? Going once, twice? Oh. I had another small question. You got it, Jackson. How do you like reset your mental confidence after a good day week? Everyone talks about recovering from a bad day, but I often have my worst days right after a good day because I start to think I'm Warren Buffett or something. I don't take like a huge joy in big days. I take huge joy in good market action. Like after the close yesterday, I was excited. I was excited because it was an exciting day, not because I had a good day P&L wise. I get excited when I trade well. I have had my biggest drawdowns after my biggest markups in P&L. So I've learned to just fight the euphoria. And when I feel it come on, I will literally email Eddie my P&L on the day, and I'll be like, I'll send you a screenshot at 4 o'clock. If it's a cent higher or lower, I will Venmo you $1,500. You know, just to keep me honest. But you know, but yeah, I mean, just focusing on this is what works for me. I'm not saying it works for everybody else, but I take a great deal of joy out of doing my job well and trading well. And once you just respect the process, You know, it's easier to take a red day, and you know, a green day, you know, profitability is just the result of compounded efforts over years, weeks, months of just grinding, doing the right things, and never stopping doing that. My biggest fear as a trader is not doing the right things. Like if I have a good day, a green day, but I broke my rules, I feel like absolute garbage after that. Like red flags go up in my head if I'm doing the wrong things. You know, I might have had a $15,000 to $20,000 day, but if I went overboard, if I didn't manage risk correctly, like I know where that leads, man. And I've been there many times, and you know that's when I know, uh, you know that's when I'll be very unsatisfied and concerned. What is the name of the floor trader pivots indicator in TradingView? Isn't it just called pivots? I use whatever Ralph told me to do. He's my chief stop doing stupid stuff officer. Ralph, what's it called? Are you in the room? Uh, Power Pivots Traditional. That's the one I use. So it's they're all the same. Big win. I move my money out of the trading account. Yeah, I think Rose does that too. A lot of traders like to keep their trading account, um, in fighting shape, like small, so they don't start to get sloppy, which is a great practice. You know, when I was recovering from my account, my biggest goal in the world was to, for some stupid reason, was to get to 500,000. And as soon as I got there, I gave 20% back within like a week. So yeah, no, I think that's yeah, no, rebalancing your account. Now I rebalance once a year, but it's different for everyone. You know, you just have to really focus on whatever works for you, whatever allows you to consistently make a living in the markets without going crazy. If you can trade in a certain way sustainably, in a in a lifestyle that you can do for the rest of your life, and you're making money and you're emotionally in one piece, whatever that is, keep doing it. That's all I'll say. You know, for sure. Tend to feel like I got tons of extra money. Yeah, yeah, Rose, for sure. That definitely happened to me a few times. 100%. Yeah, absolutely. All right, so we got an exciting day tomorrow. It's going to be Quadwitch. It's a very challenging, whippy, volatile day in the markets. So my plan for tomorrow, my game plan, is to tear down. It looks to me like the strength and conviction may continue to be in the industrials, in the solars, in the home builders, and the regional banks and gold. So I'm going to be very leery of trading tech to the upside, with maybe the exception of Tesla, um, and um, and then we'll see what happens. All right. I do have questions, but unfortunately, I'm so scatterbrained right now with taking everything in that it has been heard and seen today, and I'm okay with you. I'd rather very much like to email you my questions. Yeah, that's perfectly fine. And Julian, if you end up joining us, you can ask me questions every night, because we do this every night with our traders. This is not a thing we're doing for the open house. So $4.99 a word. Yeah, just Venmo me, throw me a bone. Just kidding. It's all good. All right, cool. Um, have a fantastic evening, guys. Rest up. Tomorrow is a big day. It's going to be a challenging session. So make sure to exercise your discipline, your risk management. If you had a difficult red day today, leave today so you can trade tomorrow with a clean head. It's a new day. Have a fantastic evening, and we'll see you guys in the morning. Take care, everyone.